Hi, this is Randy Finney with the right side of the chart, and today is Monday, March 4th, 2019. In this video, I want to go over the charts of the semiconductor sector, and we'll go through just a few of the top components. I won't do one of the exhaustive videos where I go through 20 or more. We'll just look at, again, at some of the largest semiconductor stocks, look at a couple different time frames, and that'll kind of give us an idea of not only what the, well, it'll help to confirm what the sector may or may not do here. So starting out with this chart, I posted this on the Charts I'm Watching video today. We have the SOXX, which is one of three popular semiconductor ETFs. The other two are SMH and XSD. I like this one. It tracks the PHLX SOXX Semiconductor Index, which is the longest standing semiconductor index, been around for a long time. And you can also, this is the same index that tracks or I should say that SOXX, the 3-time short semi, and SOXL, the 3-time long semi track. So if you're trading those, then this is the index you want to chart. Remember, they'll have decay because they're 3 times when you look at the longer term charts, but this is the chart you want to track because it's the same basket of stocks, unlike XSD and SMH. They have a lot of semis, a lot of overlap, but just different weightings and some different positions. All right, let's dive into the charts. What stands out? Well, you can see a very clear downtrend. I should say very clear, but pretty clear. And this is, again, a daily chart. So you see a series of lower highs. And on what was that, last week, they popped it one candle above there and then moved back down below that trend line. So they're trying at it again today. As I'm doing the video, we're flat, but I want to get this one out in advance because I just put out a potential trade setup on SOXX based on the 60-minute chart. We'll get to that in a second. So when you zoom in close, what you have so far is an island top here, because that gap up last week left an island with gaps on both sides, and we're still trading below it. So just like the broad markets or any other time you get an island like that, again, you want to look for them at the end of a prolonged uptrend, and it needs to be the highest candle. In other words, you had a gap right here, but it was below that previous candle right there. You had a gap right there, but you didn't have, well, that could have proved to have been an island top. The trend wasn't really very long in the tooth, but it's pretty darn long in the tooth now. And again, like I always say, building a case for a long or short is like, you know, a prosecutor goes into court, you know, when he builds a case on a defendant. The more evidence you have, the higher probability you're going to have to get a conviction. So same thing when trading. So what I'm getting at here is you had not only the gap, the island reversal, but you also broke this trend line off the lows. And that's a pretty well-defined trend line afterwards. So we're broken down below trend after the island top, still below it, also flirting with, this is a second, now we crossed red, so they're fading again, the second attempt. That's 2 failed attempts so far. Doesn't mean they can't take it out, but those are smackdowns at a false breakout to boot at key downtrend line resistance. So that's what I see on the daily chart. We've already had a clean bearish crossover, high level crossover on the PPO. By clean, I'm talking about the clean separation between the lines. This is a strong trend, not whippy action. When you want to stay away from the PPO, you want to look for those, you know, the clean bearish crossovers that come at high levels, particularly, or you know, bullish crossovers at low levels. Here's a bullish crossover somewhere in there. You had another low level bullish cross right there. That one did the trick. Here's a high level bearish crossover, came shortly after that high. So again, these are the things that I like to look for, and so I'm seeing a lot of check marks. Not to mention also oversold, which you also have here. Overbought, I'm sorry, overbought. Just like you were overbought here, you were overbought here. So again, that's what, 5 check marks right now for a short case. So I'll probably go ahead and add that trade, imagine, before I finish this video. And with the markets pretty much fading that attempt today, again, the SPY, another failure and rejection with a bearish engulfing candle so far at that key resistance level that I've talked about for a long time, those highs back there. I'll tell you guys, I know I've been looking for a correction for a while, but that doesn't change what's in the charts. Just because it hasn't happened, again, doesn't mean technical analysis has stopped working. It's just that it's taken a while to play out. So back to semis, because that's what we came to do here. All right, weekly chart. Here's a weekly chart of SOXX, and this goes back 10 years. You can see, trend lines. Semis work. The sector, I'll tell you one thing about the semiconductor sector. Unlike some others, I plan to do a video on the biotech sector soon. This one has a pretty darn tight correlation between all the semiconductor stocks. In other words, birds of a feather flock together, more so in some sectors than others. Another good example is GDX. When gold's running, almost all the miners are going up, especially I'm talking the seniors, those with good credit quality and all that. Same thing with the semis. They tend to be, it's a cyclical industry. And so you can see here some cleanup trend lines, you get the breaks. And the thing about the semis, there's tons of meat on the bone on both long and short trades. 30% drop there. You had a divergent high here. The first divergent high was at this point. Turn off those trend lines and show you that. And that led to a quick, 20% drop. We pushed up, extended the divergences, had about a 27% drop. Point being that swing trades and trend trades on both the long and the short side on the semis are usually at least low double digits, and sometimes high double digits and even triple digits. So fast forward to what's happened. The semis topped, like a lot of sectors and everything else. They topped in 2018. In fact, this was late 2017, early 2018, and they're still well below that top right there. You can see my resistance lines were also up against pretty decent price resistance. You run along at this level there, you can see a lot of reactions there, and then we had a key level right here that was broken last fall, came down, hit this support level here, and so these are the ranges to watch now. But bottom line is we're at resistance, and the big question is this just a kickback rally? We broke down here, we broke trend. Traded a little sideways for a while, had a correction, and the $1,000,000 question, is that it? Is that the end of the correction, or is the next leg down coming? And I want to just keep that in mind. Right now I have some pretty short-term swing targets. I mean, they're pretty respectable in percentage gains on that 60-minute chart, but like everything right now, any short trades that I'm taking at this point, I am wide open to the possibility that I may just instead of cashing out if my final near-term targets are hit, just lowering my stops down at that point and let the trade run. Try to catch a potential winner trade, because everything I've talked about for weeks now really hasn't changed in the long-term technical outlook, where we're pushing the upper limits of what this bounce should do if it's just a counter trend rally and a larger correction. But that's it. That's what I see on the charts. And again, the daily chart really makes the case, in my opinion. 60-minute chart. Since this video is for members, I'll show you the trade setup. So I mentioned there's your first break, if you will, technical break would be S1, this uptrend line right here. 1, 2, 3, several reactions here, so break of that. But we have support just below it. That's why I'm being a little cautious on this entry for a couple reasons. Number one, the resiliency of the broad market and anything related to that. These are going to move with tech. So I just want to show you the objective levels if you want to maybe scale in or get a jump on it, or if you want to wait for the higher probability entry. It's about 2% or so, I think, from below where I posted it today. If it takes out this 182.29-ish level, and you want to see it get taken out with conviction, an impulsive candle or 60-minute close. Better to even see a daily close, but you have to balance that with the fact that this market has a lot of hot air in it, and if the broad markets break at the same time the semis do, you're likely to see a quick move down as you see a rush for the exits on longs and shorts pile in. So either way, all I can tell you, I can't guarantee it'll break down. I can't guarantee we won't keep wedging up, continue to diverge. Anything is possible. There's still plenty of room left to keep these divergences intact, but so that's why we want to watch for these sell signals there, and you can see the near-term potential targets. Okay, I'm going to go through my watch list here. These are the components of SOXX, and they're sorted here by market cap. So you can see the 800-pound gorilla Intel is it's over 240 billion, and then you go down here, and by the time you're the 10th largest component, you're talking a fraction, about 10%, Lam Research, is only a tenth of what Intel is a market cap. So therefore, we don't need to go through all these. Although I will comb through here to see if we can find any gems that stand out as individual shorting ops. But I want to just go over those top ones, and we'll go from there. All right, so starting out with the 800-pound gorilla in the room, Intel. This wedge was highlighted last fall. It was a beautiful wedge. Here's your breakdown. Everything played out, and then this was a beautiful bullish wedge. So this one's come full circle, and it just goes to illustrate that more often than not, these divergences work, and they can be extended. We had bullish divergence there, we had it there, we had it there, but finally we got a trend line breakout back test, made a low-level back test. So sometimes it can be hard to nail the entries, but you have to look at everything else. However, Intel, and I believe I had this as a long-term target zone, this is where it stopped. We had a very, very nice support level. See the gap back here? We had a big, significant gap. Not only was that gap significant, but we back tested the top of the gap. One, two, well, many occasions actually. There's many candles there, and that's where that one stopped. So you had, falling to support, oversold with divergences, just like you had negative divergences at the high. All right, so where are we now? Let's look at, let's draw a little uptrend line here. Probably have to look at the 60-minute chart to get a better feel on this one. So we broke out of here. This was a pretty significant resistance level. We broke out of there. So if you're looking for a long on Intel or any of the semis, again, right now I'm only looking for quick pullback trades with that 60-minute chart, relatively quick. I can tell you this is support. So if you're longer term bullish Intel, that's an objective area to go long. I can't promise you it'll hold, but certainly an objective level. It was resistance that's now been broken. PPO starting to roll over. 60-minute chart, a lot like a lot of these. I'm not going to draw all the divergence lines. I just want you guys to know they're there. Almost all of these stocks right now are diverging on the 60-minute charts. This is what it looks like. So there's your wedge. There's your sell signal to come on a break of that trend line. There's a gap there to target, but again, this would be a back test. I hadn't zeroed that line out, but that level I just showed you on the daily. But point being, if Intel breaks, and by all accounts, again, it's been a resilient market, but that doesn't mean technical analysis will no longer work. That divergences will no longer play out, that overbought will no longer lead to corrections sooner than later. So that's what I'm looking for. And the more, by the way, the more of these leading stocks you see break these levels that I'm giving you, these trend lines, these clear, this is a pretty clear uptrend line, the higher the chance that a breakdown in SOXX will stick and prove to play out for at least a tradable correction. All right, enough on Intel. It's the leader. Oh yeah, and then the weekly chart. Let's just not forget that. Again, this is a very trend tradable stock. You look at these trends. I've measured them out before. This is showing you corrections off divergent highs. See all the divergent highs down here? These are divergence lines. 28%, 34%, 34, 14. This one, I laid these targets out. This 24 was laid out before this one even broke down. Remember, I was hyper focused on this wedge way back early 2018, listing these two targets. At the time, again, in the wedge, 24% drop and followed by a 32%. That 24 was hit, and we actually fell. We pushed a little higher, so it was a 26% total drop. Hit my target to the penny in reverse. So to me, this looks like first leg down on following a correction, and the next wave up. Most corrections have several legs to them, at least three in a corrective wave, A, B, C. You can see some. There's some legs down there. Here's another one, little kickback rally there. And so this one's been pretty large, but it was pretty much unidirectional down. So that was one leg, kickback rally, still below the highs. And I'm still leaning towards that scenario that we get another leg down and hit that target. And I would be very interested in tucking Intel away if everything confirmed. Everything's being the broad market and the semiconductor sector, and of course the charts Intel if it gets down here at about 38.27. Try to measure that out for you. If that is hit, you're talking about another 30% downside from here. All right, let's run through the rest a little quicker. I'm on a weekly time frame, so I'll just stick there real quick. Here's Taiwan Semi. Again, you can see all the wash, rinse, repeat stuff I talk about, divergent highs and corrections, 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 correction so far. Is it over? That's a big question. Broke this trend line right here, the yellow trend line. Initial leg down, kickback rally, had another leg down, struggling with the 200 or the 40-week moving average now. I laid that line there in case we made another divergent high, which we never did so far. This one, say what you want about this stock, but it is in a downtrend until unless proven otherwise, which would be, of course, if it takes out that previous reaction high right there. But so far, we have a series of lower highs and lower lows, and that is the definition of a downtrend. So, you know, not my favorite right here because I'd have to study that chart a little more. In fact, let's look at the daily. Oh yeah, I think it's a short there. They had a pretty decent resistance at 39.81. Ran into that the other day, and it's moving lower so far. Pretty impulsive move down today. You know, there's a lot to see in these charts. You know, divergent low right there, bullish, divergent high. I mean, you can see all the divergence lines. Divergent high correction. Point out this little bearish pennant at the time. With that measured target that would have been drawn in a video at the time, and you can see, look at technical analysis playing out almost to the penny there. The measured target, by the way, on a bearish pennant like this, you take the distance of the flagpole, which is what I did here, add it to the top of the pennant, and that gives your measured target, which I mean, look at that, it overshot. I had support at 34.37, but my target was just below that, and if you zoom in, look where the candlestick ended, almost exactly there. It doesn't always work like that, guys. Those are rough guides, but you'd be surprised how often bullish and bearish pennants and flags play out. And again, it was a key support level, positive divergence, everything you see took out the trend line. But again, it's you know, the big question, has it come full circle? It's just trading trends and into resistance. You know, we don't have a divergent high on the daily, but again, the 60-minute charts are telling us a lot here. Breakdowns, and like I said, I don't have every one of these charts annotated because I wanted to get this video out quickly, but you can just look down and note if I haven't noted it already. You can see the divergences, and so here's one that's starting to crack on the 60. We're on the 60, so we'll stay on there and work our way back now to the daily and weeklies. AVGO, Broadcom. Support level right there. Here was a trend line right here. What I see on this chart is a trend line broken, back tested. Here, I'll use this guy. Broken, back tested, rolled over, and now we have to take out this trend line. That's support. Yes, we did have a divergent high on that one as well at the highs. So just waiting now for a break of this trend line. Daily chart. It's quite extended. We do have divergence on the daily. I should have drawn that out in advance for you. There it is. There's your divergence line right there. This one broke out of the symmetrical triangle there, back tested and moved higher, but again, now it's run again. Looks like full circle here. This is what the weekly chart looks like. I'm going to move on to the next one. TXN, Texas Instruments. This guy, you know, a lot of meat on both sides of the trade on this one when you catch these trends. You know, this trend line break, that was a 35% drop. I'd have to move sideways to measure that one, but that drop was about 26 off the highs there. Most recent wedge right here, we had sharp divergences at the high, and had a little correction there. And again, this is, we'll only know for certain in hindsight, but that looks to me like first wave down, the kickback rally, counter trend rally, and before the next bear is over, I think this one heads all the way back down here because this little sucker is cyclical. And by the way, remember too, as I'm doing this video, all these corrections, quote unquote, which were high, you know, at least mid double digits there, they were all corrections within an ongoing bull market off the 2009 lows. So just, you know, if you keep an open mind and say that there'll soon be the longest bull market in history, that sooner or later we're going to get a bear market, in that case, a drop of, where are we now? Well, let's do from the highs. A drop of roughly 50% is very doable in this stock, and if you Don't believe that, just go back in time. I'll measure out for you here real quick. 70%, here's a drop of 56%, here's a drop of 87%, here's a drop of 65%. And all these are reasons why I love shorting stocks. You guys haven't noticed by now, I have a penchant for shorting. I love going long too, but I've always said this. One reason shorting is great, stocks tend to fall a lot faster than they rise. On the 60-minute charts and daily chart, weeks and even months of gains are usually wiped out in just days. And on the longer term charts here, years of gains can be wiped out in just weeks or months, and that's usually the case. So you gotta, get in right, and you don't stay too late to the party. But again, these are the next trends. So that's the big question. Here's some big bear markets in this stock, and we haven't had one forever. So unless the Fed has now permanently banned bear markets, I know a lot of people believe that they think the Fed will has the power to stave off all recessions and bear markets now going forward. They figured out the magic formula. I'm sorry guys, I'm not in that camp. Nvidia on the weekly chart here, starting out weekly, looks like here I'm going to change this color, this line to like that, this color. All right, so you had was wedging up here, cracked, and then set up in this a little bit tighter wedge, broke down, and then just a waterfall type sell-off. And this is just the first kickback rally after that initial leg down, and also, as you can see as I'm drawing out here, certainly takes the shape of a bearish pennant, or bear flag. There it is. So that would take us down, although the flag, I didn't do an exact measurement, would take us a little bit lower. This is my target zone for this stock. 113 to 95. If this flag isn't a flag and it continues to go up, then you want to look for resistance on this stock, or if you're long this stock, look at that beautiful, and again, don't look at choppy markets, look at a trending market. Here's the 40-week exponential moving average, which is also the 200-day, does a bang-up job of acting as support during clear trends and resistance on downtrends. So we took it out there right after we broke trendline support. So you have the intersecting 40-week moving average coming in right around this resistance level around 187.26. So that's a scenario right there. And down the road, if we get another leg down, maybe get a divergent low right here on the weekly chart. If we get another thrust down, let's say that 113 area, put a nice divergence and set up a multi-week, multi-month swing, or multi-month, I should say, swing trade when you have divergences on a weekly. Daily chart in NVIDIA, we had a steep downtrend line and just a beautiful bullish falling wedge right there. There was your bullish divergence, but again, that followed a big divergent high, a much larger. And so again, if you look at the scope of these divergences, it was viewed much better on the weekly chart. These are the same divergences. That kind of paints a bigger picture. So the smaller daily time frame here, gave us a bounce. So far, and again, there's some resistance there around 174, give or take, maybe up a little higher. But the big question is the bounce over or not? Price action hasn't been great since the breakout we had. I mean, percentage-wise, don't get me wrong, this stock will run. There's 23% or so, but then it got knocked down again, made a marginal new high. It's not acting as strong. It's way off its previous all-time highs right there. And let's see if I should do any more or not. ASML, there was a breakout, your divergent high right here, your correction, your divergent low, your rally, but right back to significant resistance. So if anything stands out on this chart, it is these two lines here. Let's see this. It looks like a topping pattern, multi-month, almost a year-long trading range there. Broke down below right here, back tested right here, failed, and moved down, and we're back testing again. So here's a stock that has rallied back up to resistance, and also you have a trend line. This isn't the best trend line. There's not a ton of reactions, but it's one to watch. And again, I'd probably put a higher weighting. I would put a higher weighting on that resistance level there than the trend line. Trend indicator still below 0, indicating this one's in a larger primary bearish trend. I use that 9 EMA right there. When it crosses below, tells you get out. you're in a bearish trend. When it crosses back above bullish, you're in a bullish trend. As long as it's above the 0 line, trend's bullish, and when it's below, the trend is bearish. All right, last one, Qualcomm. Hit support here. It looks better than most, I think. Weekly PPO is starting to turn up. There's a pretty important support shelf. I'd actually stay away from this one. It put in a divergent low there again. If I had to be long or short, I'd be long this one, at least off this divergent low. PPO is coming back up to the signal line now, so it could get rejected here. Remember, that trend indicator works well on, I showed you it a second ago on the weekly, but it does the same thing on the daily. So we had positive divergence. It has led to a rally so far, but right now that trend indicator is still below. We haven't had a cross back above the 0 line like we have here. So I'd rather just stay away from that one personally. All right, I told you that'd be it. Maybe it will. Yeah, we'll leave it with Micron because a lot of people like to trade this stock. This is swing traders and trend traders' favorite. Here's a chart. You can see what I can tell you about this stock is the gains are above average. Divergent high, 67% drop. Divergent high, 18. It put an extension. This is where some people say divergences don't work. You get the corrections and then you continue to diverge. Bigger the divergence, the bigger the drop. 74% correction. Little divergence, 28% drop. Bigger divergence so far. I don't know where I measured this from. I have to update these lines, maybe these numbers. This is, I actually put this way back when, before we even topped in this stock. You know, predicting a 60% drop from wherever I did that back at the time to T2, and we overshot my first target zone. Here's that. Look at that 40-week moving average, doing a great job. Uptrend, bullish trend, broken, bearish trend, broken, bullish trend, bullish trend, bullish trend, broken, bearish trend. Will it be rejected off this test right now? Say what you want about it, but this stock is in a bearish trend. It's in a downtrend, a primary, larger downtrend. And when won't it be? Well, number one, if it clearly takes out that 40-week, and there's not a lot of other reaction highs to really look at it above that. But you know, if you start to climb, and obviously if you took that out. But as of now, strip out everything else, and you know, the stock peaked back then. We don't have a lot of reaction lows and highs, but last thing, and then we'll leave it here. We'll park the video here. There's that trend indicator, cross bearish, still solidly in bearish territory. Last time it did it was here. Told you to stay out of the stock long or stay short up until this point. And again, I don't use that as the only buy and sell signal. I mean, overall you do pretty good, except when you get sideways choppy markets. But again, be out of the stock. You sidestep that sideways to lower move, get long. And again, I'm looking at the white line, the 9 EMA latitude across. It just, you know, it's done, especially during the strong trends, it does a great job of defining bull and bear trends. So, you know, that's it. All right, we'll wrap it up here, and keep an eye on that SOXX for a possible entry, depending on what I see on the broad markets, and that may add that at any point in time. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.